Good evening, everybody. I say good evening, good cold evening. Fortunately, we have the privilege of having Steve Primo back here with us. And I say it's a privilege because Steve's information is utilized worldwide by big money managers. His background as far as being a specialist on the exchanges gives him a lot of insights. So without taking any more of his time, Steve, again, welcome to the Candlestick Forum. We're anxious again to see some of your techniques.
Great. Thank you so much, Steve. Thank you for everyone attending today. Thanks to Candlestick Trading Forum, Steve and Becky Oxford for giving me the opportunity to speak. And thank you all for taking time out of your Thursday evening to hear this presentation. Tonight I'm going to be speaking about new and advanced ways to trade with Bollinger Bands. In fact, I'm going to give you an actual strategy which you can start using as early as tomorrow if you'd like. It's designed to trade quick momentum moves and trend moves in any market, in any direction. Even though it's not based off of candlesticks per se, you can use it with candlesticks. It's an overall pattern, a continuation pattern. And I'll give you the entry, the stop placement, and the exit rules all together. Once again, thank you. My name is Stephen Primo. I am the president and founder of Specialist Trading. Specialist Trading is first and foremost a educational company. What we do is we provide all of our members with the tips and techniques that I've accumulated in my 38 years of trading. I started out trading on the floor of the Pacific Stock Exchange. I was on the floor a total of 16 years. In 9 of those years, I was a specialist for Donaldson, Lufkin, and Jenrette. There aren't very many specialists left anymore, but so for those of you who aren't familiar with what a specialist was, if you ever look at those old pictures of the people trading on the floor with all the hand signals and the paper on the floor, the specialists were those traders behind those large wooden podiums. If you wanted to buy or sell a particular stock, you had to go to the trader who specialized in that. So the brokers would come up and talk to the specialist in order to buy or sell. We made fair and orderly markets based off of the biggest market, which was New York. Now, as I stated, I did that for a total of 9 years, and I traded through the crash of 1987. I traded through the great bull market that followed after that. I've seen and traded just about every method and technique around. I've traded in every market environment, straight up, straight down, sideways. And so I know what works with consistency and I know what doesn't. I left the floor in the mid-90s to manage money and to trade my own account as well. And I was asked to be director of education for a number of sites. But 7 years ago, I started my own site, Specialist Trading, as you see here, where all I do is teach and mentor students all of the education and things that I have accumulated in my 38 years. So that's why we say we are first and foremost an educational company. We are looking to educate you because we feel, in our opinion, our philosophy at Specialist Trading is the reason why upwards of 75 to 80% of all traders fail. And when I say fail, I don't mean you'll go into a slump. I mean you basically lose all of your capital, is because you're relying on someone or something else to tell you what to do. So we feel if we provide you with this sound education, you'll be able to empower yourselves, take your trading back, and make your own trading decisions based off sound fundamental information that has stood the test of time. We don't trade systems where everyone has to trade the same thing each and every way at the same time. We trade strategies, which is basically put together to meet your needs. So that's a little bit about what we do at Specialist Trading. Now, before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you and give you all the rules to this particular trading strategy today. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So please take a moment to view our disclaimer. And as you're doing that, I also would like to invite each and every one of you to follow us on Twitter. We have a handle right there, as you see, the abbreviation for Specialist Trading. You may want to write that down. That's at SPCLST-TRADG. I post a lot of great free information there on a daily basis, anywhere from daily financial wisdom to current signals that we're in, to videos, little learning webinars here and there. So a lot of great free information to follow us on Twitter there. And you can also follow our sister site, which posts a lot of my videos and information as well on Facebook. Our sister site is Proprietary Strategies. They market and promote all of our strategies and techniques, and so you can go to Facebook and log on with ProTraderStrategies.com. Okay, so that's how you can contact us and view a lot of our free information on a daily basis. So here's what you're going to learn today. All right, as I stated, we are an educational company. I give a lot of attention to teaching, just like Steve does. I know Steven does a lot. He gives a lot of attention and detail to trying to teach you how to learn these specific patterns, candlestick patterns. I do the same thing because we really, having been in the business so long, we know that the secret to really being consistent is through things that work and educating yourself rather than relying on someone or something to tell you what to do. So here's what we're going to learn today so you can start using this. We're going to first go over the common uses of Bollinger Bands. Bollinger Bands are a great tool, a great indicator. We're going to show you how they were specifically designed and how most people use them, how they implement them. Then I'm going to share with you some proprietary settings. These are settings that I was introduced to on the floor of the exchange in a completely different way to implement and apply the Bollinger Bands. Now you can, I'll show you what these settings are. You can, I'm sure this is being recorded, so you can write them down or either request a recording. But it's very simple, just a few minor changes to the basic settings of the Bollinger Bands. With these settings in place, we will move on to the strategy and how this is implemented within strategy number 3A. All right? Okay, so let's review Bollinger Bands first. And before we start, once again, I know people like to take questions many times during the presentation, but I would rather take questions at the very end. So if you have a question, kindly wait for the next 20 minutes. We'll probably be finished with this in 20 or 30 minutes, and then I'll go over the remaining of the presentation to ask any questions, or answer any questions, I should say, okay? All right. So let's give a refresher course in what Bollinger Bands are for those of you who aren't familiar or don't really use them a lot. Here's the common definition. Bollinger Bands consist of a center line. That's the moving average. Typically, it's a 20-period simple moving average. And two price channels, or the trading bands, one above and one below. Okay, so this gives you the bands. Now, when markets become more volatile, when there's a lot of movement, the bands widen, or in other words, they move further away from the average, which is in the middle. And during less volatile periods, when things are kind of quiet or kind of range-bound, the bands contract. They move closer to the moving average in the middle. All right? So, therefore, the tightening of the bands is often used by technical traders as an early indication that the volatility is about to increase sharply. Okay, so let me just show you some standard charts here of what this looks like. First of all, I'm sorry, let's go over the settings. The settings for Bollinger Bands, here are the basic standard settings. These are not the proprietary ones, but these are the basic settings. You have a 20-period moving average, and then the upper band deviation, the lower band deviation. All this means, without getting too technical and explaining exactly how it's based off and everything, all it means is that the upper band is going to be 2 deviations above the moving average. The lower band will be 2 below, and that's it. Okay, that's the standard default setting for Bollinger Bands. And if we see what this looks like on a chart view, we see here that the bands are here. Let me get my pointer out. And what we do is we have a top Bollinger Band, the middle moving average, and then the bottom band. As these bands contract, as you see, the top one is coming lower and the bottom one is going higher. Well, then they're getting tighter and tighter, and then we have volatility falling right after that. In this case, the volatility was to the upside, so the market went up sharply. Now, this can happen to the downside as well, as we see the top band going lower in a lower direction and the bottom one start to contract to the upside. It gets very tight in here, and then look what happens. We have strong volatility to the downside. Now, that's the conventional way to use this. Here's my only problem with this. As when I was learning how to trade some 38 years ago, I wanted things that were cut and dry. I didn't want things that were that subjective. In other words, with this type of technique, which direction are they going to go? Is the market going to be heading up? Is it going to be heading lower? How do we know? You see, it's easier to trade if you have a plan in mind where you know right off the bat if we're buyers or if we're sellers. We don't want to be that subjective where we're kind of guessing along the way. This is a great tool to tell us that volatility is coming in, but it doesn't really give us any more than that if we use it in its standard mode. So, this is where we go to strategy number 3A. This is where we really pinpoint it down to all the rules for entering, stop placement, and exit placement. All right, so here are the highlights behind this particular strategy. It's a continuation strategy. We're not looking for a pullback. We're not looking for any type of congestion. We're actually looking to jump on board a trend, all right, either at the beginning of the trend or once it has started. So what we do is we use a unique Bollinger Band setting in order to locate or identify whether a trend has started and whether all the requirements are met. Now, this particular strategy is designed to trade quick, powerful trends. All we're looking for is to jump on board once again. So we're really not looking at any type of candlestick pattern per se, a candlestick such as something as a doji continuation or a bullish or bearish engulfing patterns. Those are all great, but in this particular strategy, we don't need those. We can still apply this with candlesticks, but what we're looking for is requirements that are met due to a couple of indicators that we're going to be using. All right. Now, this can be used in any market, in any direction, in any time frame. But obviously, if you like to get a lot of these signals, the smaller time frames will produce a lot more. Okay? If you use a daily or even weekly bars, you're going to get signals as well, but you'll be less signals as opposed to using maybe a 5-minute chart or a minute chart. As with all of our strategies or techniques at Specialist Trading, we always advise all of our members to learn the strategy like the back of your hand. Really understand exactly what the process is, and then paper trade. We have so many students, people that have purchased this strategy, and people in past presentations that have received this for free that love this, and their eyes light up when they see how it works, and then the minute they start trading it, they lose money. And that just means because once they email me, ask me how come it's not working, I go over what their process was and see that they are not implementing it correctly. So we want you to learn the process, learn the rules, and then that's how you'll learn this process even more. All right? Our edge at Specialist Trading is consistency. We are not promising that you're going to be making millions by the end of the year, that you're going to be self-sustaining and you'll be buying a house in a couple of months. All we're stating is that our techniques and education has this type of 2 steps forward, 1 step back approach. There's a consistency in it so that you'll have the true meaning of success, which is longevity. We want to give you information that is not going to make you hundreds of thousands of dollars in a short amount of time, because we know that you can just as easily lose it with a method like that. We're trying to give you techniques and information that will sustain you 10, 20, 30 years down the road. Okay? All right, so here are the indicators we're going to be using for this particular strategy. 2 indicators, that's it. A 50-period simple moving average, and it does not matter if we're looking at a weekly bar, if you're looking at a 5-minute bar, or if you're looking at a daily bar. You always have a 50-period simple moving average plotted on your chart. And then we're going to apply the Bollinger Bands, the same 20-period setting for the moving average, but we're going to change the upper and lower band deviation. Remember, the standard default was upper band was +2, lower band was -2. Now we're just going to change that and edit that to the upper band being 0.382, the lower band being -0.382. That's the distance or the deviation it's going to be from the center moving average. And that's it. There's nothing magical or mysterious about that number. I know it's a Fibonacci number, but it's just something that was introduced to me that has a large amount of consistency to it. And so that's the only reason why we're applying it. So if you want to change it by 1 or 2 increments, that's fine. There's nothing magical about it. As I stated, it just works very well overall markets, okay? So if you're having trouble changing that or editing that with your particular charting software, contact your tech support, your charting software tech support. They should be able to help you set that up, okay? All right, so these are the rules. We're going to go step by step, and I'm going to show you a lot of slides, and then we'll show you some more current slides, as current as today, in fact. Okay, let's look at the entry price. Step number 1, the entry price must be above the 50-period moving average. This is if we're going long, okay? So obviously, if you're going short, we'll show you a number of selling setups as well, but in this case, we're just going to give the rules to go long. So if we want to enter, regardless of anything else, we must enter, our entry price must be above the 50-period moving average. So if we look at this generic E-mini chart here, we're going to see that we have the Bollinger Band setting plot. You see how the Bollinger Bands are much smoother with this change now, how they really don't have that kind of jagged, kind of up and down and contraction. We're not concerned with that. We want to see this nice smoothness of the Bollinger Bands. And then secondly, we see that for all intents and purposes, here's the 50-period moving average, price is above. So this is telling us that we have the right environment for a buy setup. So this is what we're looking for, okay? All right, so that's step number 1. Step number 2 simply states we are going to look to buy, and you realize I say look. It doesn't mean we're going to jump in and buy at the market. We're just simply going to look to buy when we locate 5 consecutive price bars that close either on or above the highest Bollinger Band. Okay, I'll say that again. We want to find 5 consecutive price bars closing either on or above the highest Bollinger Band. And this, now we're going to see if it creates a pivot high. Okay, we will identify this and label this the setup. The short-term high will be labeled as the setup. Remember, we're still not entering yet. This is just our setup. So if we look at that chart again, well, first of all, I know a lot of you may not understand or be a little bit confused about what a short-term high is. If we look at this, this is a very ideal scenario here, but a short-term high is just a series of bars. Once again, it doesn't matter if we're looking at candlesticks, it doesn't matter if we're looking at 5-minute bars, but you want to see higher highs being made followed by lower highs, okay? You create this kind of a arrowhead, kind of an upside down V. That's a short-term pivot high, okay? It doesn't have to be 5 bars. It could be made by 3 bars, it could be made by 7 bars. It doesn't matter, but all we're looking for is a high being made by one particular bar. Okay, so let's go to the chart once more. All right, we're above the 50 period. We have 1, 2, 3, 4, 5 consecutive closes above the highest Bollinger Band. And then we have this short-term top that was created as well. Okay, so all this happens, and these are all the requirements that must be met in order for us to go long. This is our setup. This is why it doesn't matter if we are looking at candlesticks or if we're looking at open, high, low, close bars such as we are here. Because all that matters is that we're looking to see that the requirements are met with these indicators and these tools. All right, so if we have a proper setup the way we've just defined, well, what's our next step? Step 3 is we're going to enter to buy once price trades 1 tick above that short-term high, 1 tick above that little arrowhead, okay? Now, here's the one caveat. If the price bar closes below the highest Bollinger Band before we enter, in other words, if we do not enter, if it doesn't trade above that short-term high and price starts to sell off and then closes below that Bollinger Band, well then we're negating the whole setup. The setup's over. We're not going to trade this setup. Why? Because we've lost momentum. Remember, this is a trend following strategy. We're trying to catch trend, and if price comes all the way and closes either on or below that Bollinger Band, it means the trend is most likely dissipated. So we don't want to get involved in this, all right? So if we look at that scenario once more, we have the perfect setup right here, 5 consecutive closes above this highest Bollinger Band. We want to see it trade 1 tick above that short-term high, and it does on the next bar. So there's our entry point right there, all right? So that's where you would enter. As you see, if price had not gone above this short-term high and then come all the way back down and close somewhere in here, the setup would be negated. All right, but it wasn't negated. We did get in, so we have a buy setup. Now, where do we protect ourselves? Well, we're going to place our protective stop below the lowest short-term low prior to entry. All right, so the short-term low is just the same as the short-term high, just upside down. So instead of having an arrowhead, we're going to have like a V, a short-term V, a low followed by a lower low followed by a higher low. So as you see here, here was the first short-term low prior to entry. Right here we had a low followed by lower lows right here followed by higher lows. So that's where you place your stop. Now we realize a lot of people would say, but boy, Steve, that's a pretty big stop. That's about 7 points. I can't risk that much on the E-mini, or let's say this were a stock. That's fine, but the beauty of this strategy is you know in advance where you're going to be getting in, you know in advance where your stop will be, so you can decide along your risk parameters, can I risk this much? Or how much shares or how many options or how much futures should I be trading here? So, if this is too risky for you, then don't take the trade. There are a lot of setups, especially if you're looking at short-term trades here. All right, so we've entered, we have our stop placement. Where do we get out? We're going to exit on a range extension of 200 and or 300%. Now, this is where people usually get confused, and most likely this is where most of the students have mistakes when trading. What exactly is a range extension? Well, the first thing we want to do is just know what range we're talking about. The range is from where the rally first started to where the top of that short-term high was. That's the range we're concerned with. So if we look at this, here was where the rally started right here. This is where the price took off. And here was the top of that short-term high. So this is the range. This is 100%. So what we want to do is simply take whatever amount of points that was and then add it on top, and that gives us 200%. See how simple that is? And that's our first point of exit. That's our first exit. If we want to go for more, we simply add that range once more, and that gives us 300%. Had you taken that, there's a quick 11 points in the E-mini, roughly $550 per contract in just a couple of hours or so. Once again, we weren't relying on any outside source. We didn't care what some jobless claims were telling us. We didn't care what someone was telling us on TV, some trading guru. All we're looking at is price. All right? That's all we're interested in, because price tells us just about everything we need to know. And what the price did in addition with the indicators we're looking at, it just simply told us that most likely we have a nice trend in place. Let's jump on board once we trade above that short-term high. All right, so that's it in a nutshell. Let's look at some more strategy 3A examples. Let's look at some stock examples for all you stock traders. Remember, we can do this, we can trade this strategy in any market and in any time frame. Here's BBBY, as we see here. This was in November. Now we see here that we had 5 closes above the tallest Bollinger Band, but then we quickly went below, and so that trade is negated. There's no setup. We had closes below, but then we went back into there. So you see, this is why we negate the setup, because there's no real trend established. Now, as we see here, we have some more closes that are above the tallest Bollinger Band. So we have a total of 5 closes right here. And then now that we see that, and we're above the 50-period moving average, we have located a short-term top. So we have, excuse me, a ripe environment to go long, but we have to trade one tick above that short-term top in BBBY. And it doesn't matter if it trades on the next bar or if it trades 2 weeks from now or a month from now. All we're concerned about is that price does not go below that top Bollinger Band. As long as we stay above the Bollinger Bands, we know that we have a strong trend in place. So as you can see on the very next bar, we did trade there. All right, so that's your entry signal. You could have either simply bought at the market, or you could have placed a buy stop in there. It's up to you. And so we entered at 67.98. Okay, so we want to find out where to place our stop. The previous short-term low, which was right here. Okay, and so we're roughly risking about 3 points. Roughly, it's around 65. Okay, so you're risking about 3 points on this trade. You entered here. You're going to be stopped out here if we happen to have a losing trade. Now, the next thing we need to do is measure the range of where the rally started and the range of that top of that pivot high. And so as we go to the next slide, that's the 100% range right there. So now that we know what the range is, we simply double that. That gives us our first exit point at 73.45. So right off the bat, we would have made about 5.5 points. We risked about 3 to make 5.5. If you wanted to go for more, you would use the 300% exit, which would be at 79.09 to make 11 points. See how simple this is? We're just listening to what the market was telling us. And so you would have exited this trade. You would have been in this trade a couple of months, but made a nice 11 points using this. You could have purchased options. You could have, had the actual stock. It's up to you. And one of the good things about this is exiting at the 300% range as many times as you see right here, the trend is over, or it's getting very near the end of the trend. So that's why we say, especially in the beginning, exit at either 200 or 300% before the trend starts to go in the other direction. How about to the downside? Here's SNDK. This was at the beginning of the year, just about a month ago. Now here's where students have trouble as well. As you see here, for all intents and purposes, the majority of price is above the 50-period moving average. So this is where students say, well, Steve, shouldn't I be looking to go long because price is above? Remember, the first rule is we want to see 5 consecutive closes below or above the Bollinger Bands. Now, in this case, they are below, but then they went back into the range of the Bollinger Band, so there's no setup. But now we have 1, 2, 3, 4, 5, once again, below, okay? So that's 5 consecutive closes below the lowest Bollinger Band, and we have now created a short-term low. That's that little V type of formation. So where would our entry be? If this were a valid setup and we were to enter, our entry would be right here once we trade 1 or 2 ticks below that low of that short-term pivot low. And that's below the 50-period moving average. So that's a valid sell setup. Even though the majority of bars were above the 50, we're entering below, and all of the other rules are met. So once again, we're looking at these requirements to be met because of this specific pattern. Doesn't matter if we apply candlesticks to this. It doesn't matter open, high, low, close. All we're looking for is a specific pattern applied with the indicators as well as the price bars. So price traded below in the very next bar. So you entered to go short SNDK at 94.46. Okay, so we're short roughly at 94.46. That's where our stop would be right here because this was the last short-term top. Okay, you see here we didn't have any short-term tops up until we got up to this point. And now the next thing we want to do is simply measure the range, where the sell-off started to where that short-term low was. That's 100%. And in this case now, since we're going short, we simply just subtract that, 200% and 300%. And so we would have shorted at 94.46. We could have exited at 87.07, covered our short, or if we wanted to exit at the 300% range, we would have exited at 79.67 and made nearly 15 points in just a couple of weeks. All right, this was just a couple of weeks ago. So you see here, this works going up, buying stocks, selling stocks. It also works in the commodities market. Here is a chart in heating oil, okay, going back to the beginning of December last year. Now, it's safe to say that we're looking to go short all the way since November. Why? Because price and everything is below the 50-period moving average, and we're not even having 5 consecutive closes above the 50, so we know that we're looking to go short. So all we have to do is count 5 consecutive closes below, as we see here. Once we've located 5 consecutive closes, we simply identify that short-term low, which is right there. That's that little V, okay? And we will enter to go short at 23.05, okay, 2.2305. There's where we place our stop. Once we've entered, we look to see where the last short-term high was right here. So we placed our stop, okay? All we do then after that is measure the range. Where did the sell-off begin and where was the low of that short-term low? Right here. Sell-off began right here on this bar, and here was the short-term low. So this equals 100%. Now, I want to show you something. This is, you can also do this, but this is more for advanced traders. When you are just starting to learn this technique, as I said, I want you to study this. This is being recorded. You can watch this as many times as you like, or if you've written down all the rules and everything. Practice this and then trade it on paper. If you get a really good feel, if you really feel as if whatever you're trading has a much larger move in it, we can suggest that you will use not only 200 and 300%, but you can also apply 400%, but no more than 400%. Okay? So in the beginning, all beginners should exit at the 200% range. You get a little more experience under your belt, exit at the 300, and once you really feel confident with this and you really feel that there's a big move in this, you can use 400. But we would suggest no more than 400. Most likely the trend's going to change and you'll be left holding the bag. So if we applied the 400 here, look what happened. We got right down there to 1.6342, and this is what has happened in the first 2 or 3 weeks up until the beginning of February. Okay? So we've seen how this works in stocks. We've seen how this works in commodities. Let's go over now and start looking at the E-mini. All right, let's look at smaller time frames. Let's start out with a 30-minute time frame. All right, this was just a few weeks ago at the very end of January. We have a 30-minute bar here. We're looking at the E-mini. Once again, it does not matter what type of bar. You could be looking at a candlestick. It does not matter. We're not looking for specific candlestick patterns to tell us what to do. We're looking for basically to break out of a short-term top, but we need requirements to be met. First requirement is we need to see 5 consecutive closes above the top Bollinger Band, which we do. Next thing we want to find is that price has created some type of a short-term top, which we did right there. All right. If we enter, we're going to be entering right here, which is above the 50-period moving average, so we have a valid buy signal. Okay. So all you want to do is enter. We would have entered here at 2020. Here's where your stop would have been. And that's roughly about 20 points or about $1,000. So once again, we realize this is a lot of money for some people. There's $1,000 you're risking on this particular trade per contract. If it's too much, don't take the trade. There's a lot of other types of trades. But if this met your needs, if this did meet all of your qualifications, you could risk that. Well, as a beginning trader, we want you to measure the range where the rally started. Started right here. Here's where the rally started, and here was the top. That's 100% range extension. You simply double that, and in roughly 1 day, you've made 22 points or $1,100 per contract. Okay? Once again, extremely simple. This is a 30-minute chart, let's look at a 5-minute chart, okay? Now this 5-minute chart was, I believe, on the, yes, if we look here on the chart, this was going into the beginning of the 4th, so this happened, I believe, on the 3rd, which was Tuesday. Price is above the 50-period moving average. We're looking for 5 consecutive closes, 1, 2, 3, 4, 5, above the top Bollinger Band. So we have a valid setup right here, and here is the first short-term top that was created. So this means that we can enter once we trade one tick above that, which we did here at 2030, and you could have placed your stop just about 3 or 4 points below that here, I believe. Okay, so this is a little bit smaller risk. Why? Because you're on a smaller time frame. So now that we've entered, we've placed our stop, we simply find out what the range was. In other words, where did the rally start and where was the top of that pivot that we entered off of? So that's 100%. Remember, this was just a couple of days ago on a 5-minute chart. You could have exited with a 200% with a 6-point gain, so you roughly risked 3 or 4 points to make 6. And if you wanted a little bit more, you could have exited with a nearly or over 12-point gain. This was all in the last couple of hours of Tuesday, I believe. All right, and lastly, this method works well on Forex, and in fact, we can use a different time frame. Here's a weekly chart of the Forex. This is very similar to the other one we looked at earlier in SNDK, but this is the currency pairs, totally different market, and totally different time frame. We're looking at weekly bars now. Once again, all the bars are above the 50-period moving average. All right, even the Bollinger Bands are above. We have 1, 2, 3, 4, 5 consecutive closes, but then we close below, so everything is negated. We have 5 more closes above, or 4 more, but then we go below. But now we have 5 consecutive closes below the lowest Bollinger Band, okay? And we have just located a short-term low. If we were to enter based off this short-term low, the short-term pivot, we would be entering here, and that is below the 50, so we have a valid setup to go short at 1.3501. Here's the most recent high, the short-term top, so that's where your stop is. So you've entered here. This is where you'll be stopped out if the trade does not work out, because we're not going to promise you that they all work out, but they have a high level of consistency to them. Okay? And then we just simply measure where did the sell-off start and where was that first stopping point at the short-term low. Well, that's right here. The sell-off started right here, and here was the short-term low. So this is 100% range. So whatever that amount is in pips, we simply subtract that. And once again, if you had a strong feeling or you really felt strongly about this being a large trend, you could have gone to the 400% range extension. And just trading one contract, one lot, you get close to a $1,500 gain in just a matter of months here. So let's recap before we go to any questions and answers. Let's recap this strategy. There you have it. You have the basic format. Obviously, we can go into more detail and heighten these rules. We can talk about different stop placement, different entry points, different exits if you'd like to use them, how to trade more aggressively, how to trade more conservatively. That's all involved in our courses, what we have. But let's recap the basic format of this, which you can start applying as early as tomorrow. The highlights, remember, this is a continuation strategy, okay? We're looking for a trend, and then we're continuing within that trend, okay? We're continuing to go further and further. Hopefully, it will go in our direction. This applies a unique Bollinger Band setting. We're looking for that Bollinger Band setting that is just slightly edited. Remember, the standard default was a +2 deviation and a -2 deviation. What we're doing here is we're decreasing those deviations to 0.382 and -0.382. You see, once we applied that and implemented that edit, we had much smoother Bollinger Band. So that's what we're looking for, because in this case, we're just looking for the direction of the trend through the Bollinger Bands. Okay? Remember, if you have trouble implementing that or changing that, simply call up your tech support. They should be able to do that for you. This method is designed to trade quick, powerful trends. Once again, it doesn't work all the time, but you know where the stop placement is. We've told you where the stop placement is, so if it doesn't work, you know prior to entry how much you're willing to lose. So I see someone asked, how about losing trades? Well, just imagine that, maybe a third of them or a quarter of them would not work. Well, you get stopped out at a certain point. So if you're willing to take that risk, then take the trade. If it meets your risk parameters, take it. If it's too much, don't take the trade. This is why we always say paper trade first, as you see here. Paper trade the strategy. This is where you'll learn how to implement it to fit your needs. Remember I said in the very beginning of the presentation, we are not a systematic company. We don't keep records. We don't keep, worst case scenario. We don't keep odds. We don't have systematic numbers such as that because we're giving you education. And then we pretty much mentor you and help you design it to meet your needs, whether you want to trade it more conservatively or aggressively. All right? So paper trade it to see how you want to trade it to meet your needs. And then once you do, that's where you get on that level of consistency. Remember, we're more concerned about you trading 20, 30, 40 years down the road. It doesn't matter, if you make hundreds of thousands of dollars. When I was working on the floor, I knew tons of traders who made hundreds of thousands, if not millions of dollars in a short amount of time. And I can tell you right now, not one of those traders is trading anymore because they've given it all back. Most of them lost it while they were still on the floor. So it doesn't matter, if you have some technique or some, method that is designed to make you a millionaire by the end of the year, because those are the same, methods that can easily have you lose it. What's more important is, I'm sure Steve knows the same thing, what he teaches in his courses, is that longevity is the key to success. So that's what we're trying to do here, give you consistency in a setting that will meet your needs. Now, I want you to ask yourself, before we go into question and answers, I just showed you a lot of great edges, okay? And these edges made up this particular continuation strategy. Now, there was the edge of the Bollinger Band setting. This is a setting that was introduced to me on the floor, okay? Plus 0.382, negative 0.382. It really has a nice smooth feeling to the Bollinger Band. I also gave you the edge of 5 bars closing above that, all right? That just gives you the sense that there's a strong trend underway. How about the edge of the pivot points, entering above, not just simply buying at the market, but entering above or below a pivot point? How about the edge of the exit placement, okay, the range extension? I know a lot of people have never heard of that before, but that's a great technique. One of our exiting patterns in a lot of our strategies, we use range extension, different 200, 300, 400, lots of ways to apply them, okay? Now, ask yourself, even if you didn't want to trade this strategy, I don't, force you to trade this, but let's just say it's not your cup of tea. What if you could have applied any one of those edges just to enhance what you currently are trading right now? They're very powerful edges, and they can be used on other strategies as well. You can incorporate them in anything. So ask yourself, and ask yourself honestly, do you think any of these edges could have helped your trading this past year? Even if you just used one of them and didn't particularly trade the strategy I just gave you. Well, how would you like maybe 3, 5, maybe 8 more edges just like the ones I presented, but entirely different? What if I could give you another trading strategy as well? I just want to take a few moments to talk about the offer we have for all the attendees today with our affiliation now with Candlestick Trading Forum. This is our offer. It's an online video course. We titled it The Secrets of a Stock Exchange Specialist Training Sessions. A couple of years ago, I was asked to speak at a seminar in Denver where hundreds of people came to see me speak, and I spoke for 3 hours, where I went over a lot of different points. I gave many more edges, such as the ones I shared with you today. I told in the seminar which indicators to use, which ones not to use. I discussed the difference between a system and a strategy. I shared what I feel is the #1 chart pattern that you should be looking for in all strategies. And then I gave you, I think most importantly, the complete rules to another strategy altogether. This has nothing to do, it's not based on anything what I share with you today. It's based on a pullback type of pattern. And in fact, let me show you some recent examples using strategy #1. Okay? As you see here in CVS, this is a pullback strategy where we're not waiting for price to trade above short-term highs. We're waiting for pullbacks in an uptrend. Here was a signal generated a couple of months ago to go long. We had a really nice rise, and here was another one generated just about a month ago. These are 2 long setups. You see here in Amazon, well, this was another signal, but this one was to go short right at the very end of last year, the beginning of this year. We had a very nice rally in Amazon. Almost at the very high, strategy #1 generated a sell signal, and look what happened after that. You realize, Amazon's a very expensive stock to go short, but you could have purchased puts. Many of our traders are option traders, and all they do is once a signal is generated, rather than buy or sell the stock, they just simply purchase long or short calls. It's up to them. Here's another one in Lulu. This was on the 18th of December, just last year, a couple of months ago. As you see here, The stock was starting to sell off. Many people thought it was going to be making lower lows, but strategy number one generated a buy signal. And look at the nice gains that have followed all the way coming into February. Best thing about this particular technique and strategy is that once again you can apply it to any market, any time frame. Remember, the strategy I just shared with you and revealed to you today is a continuation strategy. Strategy number one is a pullback strategy. Strategy number one gets you selling in towards the highs of those rallies and gets you shorting towards the highs, I should say, and gets you buying towards the lows of those pullbacks. Here's a 5-minute chart just a couple of weeks ago in the E-mini. See here how you could have gone short at these highs coming into the end of the day on a 5-minute chart. And this was this morning on a 1-minute chart, okay, using strategy number one, which is in this online course. This was this morning, first hour or so of today on a 1-minute chart. As we see here, we opened up higher. Everyone following the market today saw that we gapped up, and then we continued to go higher. Kind of a quiet, rangy day, but if you looked on a 1-minute chart, we had all these nice little pullbacks. These were all buy signals generated using strategy number one. As you see, we're purchasing on these pullbacks. And then lastly, you can apply the same rules, everything, to the currency pairs. Here's the Canadian dollar. As the Canadian dollar has been rising and rising up until 2015, we see all these sell-offs and pullbacks where strategy number one generated buy signals. You see how this strategy is completely different from the one I just gave you, because we're looking to buy at lower prices and looking to sell at higher prices as opposed to waiting for a pivot to be violated. So therefore, I gave all of this in a seminar. It was recorded, very high definition. It's a 3-hour seminar that we're offering to all of the attendees today. Now this is actually our sister site, which is Pro Trader Strategies, which I said has the Facebook account where you can go there on Facebook. They market and promote all of my strategies, all of my courses. On their site, they sell this 3-hour online course with all this information, including my personal email address. You can contact me whenever you'd like. They market this and promote it for close to $1,000, $997 for all of this information. But once again, because of our affiliation with Stephen Bigelow and Candlestick Trading Forum, we are offering this for only $37. $37. I mean, it's probably less than many of you spent trading in the markets today, probably less than some commissions that you went through today. So once again, because in good faith, and we've done some presentations with you before, our Secrets of a Stock Exchange Specialist training sessions with all the many more trading edges such as I shared with you today, along with the complete rules to strategy number one and my email address where you can contact me whenever you like, usually going for $997. This is going for $37 only. So you can sign up and you can be already be trading and using these and getting these rules for tomorrow if you like. So for more information, you can go, as I stated, to our sister site, which is Pro Trader Strategies. They market and promote all of my courses, and you can contact any one of their trading consultants by emailing them right here at the email address trading@protraderstrategies.com, or you can call them directly if you'd like to speak to them. They're manning the phones right now at 310-598-6677. And Becky has so graciously put up the link to that special offer I see there in the chat box. You can click that on, and it will take you directly to the sign-up discount page, a $37 discount. As you see here, I have it on here as well, but you'd have to cut and paste it onto your browser. So thank you, Becky, for putting that onto the chat box. And you can simply click that on, that link, and it will take you directly to the promotional page. Once again, this is a great offer. It's a great strategy. We have members who have paid close to $1,000 for all this information. We're offering it to all the people at Candlestick Trading Forum for only $37, okay? So if you take advantage of that deal, which is only, I believe, good for a couple of days, you're not only be having strategy number one, which is in the online course, but you can also, you're also going to be able to trade the strategy I just gave you as well. So you're basically, for $37, you've got two strategies, one a continuation and another one a pullback, as well as my private mentoring and contact and accessibility to my email address as well, okay? Okay, I'm going to leave this up here for anyone as well. The link is posted on the chat box, and I'll go to the question and answer page. I want to thank you all for waiting and holding off on the questions, and I will open up any questions here. If you excuse me, I'm going to kind of backtrack and try and start at the beginning here. And I see a lot of people are asking, is this recorded? Yes, I believe this is recorded. So once again, if I happen to miss a question of yours, or if you want to get the settings to the Bollinger Bands or things of that nature, this is recorded. You will be able to access this. Excuse me, I'm kind of clicking down here so I can see where the first question was. Excuse that clicking sound as I go down the list, but I want to kind of start at the beginning. Let's see here. A lot of people talking about the cold weather. I can see here in a lot of the questions. Yes, I'm on the West Coast, so I understand what you're going through. Dan asks, what are the Bollinger Band settings? Okay, that must be a very common question. So for all of you who are wondering, before I scroll down to if there are many more questions such as this, get out a pencil and paper. I'm going to tell you what they are right now. So remember, they're very simple. It's nothing complicated, nothing mysterious or about this, but we're going to keep the same moving average setting. In other words, it's going to be set at 20 periods, okay? Now, the top deviation for the top band should be 0.382. 0.382. And the lower deviation should be negative 0.382. Okay, that's the distance you should be, the deviation from the 20-period moving average. And remember, this is not written in stone. This is why we say we do not, teach systems, because systems require you to do the same thing each and every time. Everything must be the same. Therefore, you can get results on percentages and numbers. We don't do that because it's our philosophy that no two traders could or should ever trade alike. You should trade things that meet your needs and meet your persona. Some traders are aggressive. Some are conservative. Some like to trade 20 times a day. Others like to trade once a month. So you can't say that everyone has to trade the same setup. So therefore, 0.382, negative 0.382 is not written in stone. It's something that has worked and stood the test of time. If you want to change it to 0.50, negative 0.5, that's fine. But this is yours to work with and research. Go ahead and feel free to research and see something that works for you. Remember, we want to educate you, but we also want you to become a part of the process, okay? Okay, let's see. Let's see, an interesting and practical information on advanced Bollinger Band application for trading. Can we add traditional parabolic SAR stop and reverse to enhance further the Bollinger Band application? Yes, I'm sure you can. Once again, this is what we encourage. We want you to find things that have worked for you. This is where we say you have to become a part of the process. Some people will want to use the parabolic SAR, others will not. So that's fine. There's nothing that by applying that will alter this strategy. Now, if you said, Steve, can I only trade this on days where the earnings come out? Well, that really has nothing to do with what we're teaching here because we don't really follow earnings. We don't follow news events. So then you're stretching the bands a little bit too much, no pun intended. So, we want to just keep in line with following what the market is doing. Our real philosophy is that everything you need to know is in the chart in front of you. We don't listen to outside sources such as people on TV or news events, things of that nature, or your friend down the street, what they think the market's going to do. We just really put most of our focus on the chart in front of us. And the reason I say this is not to be arrogant or condescending, but believe it or not, I make no secret of this. I said in my webinars before, my first or second year of trading on the floor, I had a very difficult time. In fact, I couldn't make a dime. I traded probably the way most traders trade. I was relying on all these outside influences, anywhere from news events to trading gurus to subscriptions, and every conventional wisdom technique I had been taught that was supposed to work, and it didn't. Nothing worked. And I would have maybe 3 or 4 great trades, and then the last trade I would give everything back. It was extremely discouraging and very depressing because I was working so hard to be successful and I couldn't make a dime. I'm sure many of you may be feeling the same way. Well, I had some mentors who were specialists on the floor. They had been trading about 30 or 40 years themselves, and they were able to turn my trading around by instilling these concepts and by telling me to simplify my trading. And this is what I did, and my trading started to come around after that, and that's why I've been able to trade for 38 years. So this is what we do at Specialist Trading. We try to instill the same things, the specialist edge that was taught to me. which is rooted in simplicity, and its philosophy is really to trade the chart in front of you, and that's it. Okay? Let's see here. Some more questions. Gary asks, can you show one losing trade? Well, I'm sorry, Gary, I didn't have a losing trade in there because I want you to understand the concept. But remember, we told you where the stop placement was. In fact, one of those E-mini trades, I believe, had a 3-point stop placement. So just imagine that, once again, I'm not going to promise you that every trade works out well. But if you could take that 3-point loss, just imagine that one didn't work out and hit the stop and you're out. So what do you do after that? Well, if it's in your risk parameters, you still have enough to trade, and you haven't depleted your account. Well, you go back and you look for another setup, and that's it. We don't really have to illustrate what a sell looks like. They do happen, but we just want you to understand the process. And that's why we wanted to put favorable trades so that you can understand where to exit. But once you have the stop placement in there, that's why we place the stops, because we know that from time to time you will have some minor losses. But please remember, once again, that there is no way you have to take every trade. This is not a system. If you see a great setup and then you see where your stop placement would be using these basic format, and it's far too great of risk that you're able to take, well then don't take it. You don't have to take the trade. Now if you want to use a different stop placement, that's fine. We have money management courses where we teach up to 7 different stop placements. So you can call up the good people at Proprietary Strategies and ask about our money management courses as well. And so you can apply all these different techniques. So if you have a stop placement other than the one I shared with you that you like to apply, that's fine. There's nothing that will alter the strategy in itself. Ken asks, what is the strategy number 1? Well, strategy number 1, I didn't go over the rules to that because that's in the $37 deal. That's a pullback strategy. And that's basically off using one indicator, and it really pinpoints extremely well pullbacks in all markets, pullbacks trading with a trend. So it's entirely different and based entirely different rules than what we shared with you today. But those rules are in the course, and it's only cost $37. People have paid hundreds of dollars for strategy number 1, and we're offering it today along with a ton of 3 hours of more information in that $37 deal. But you have to take advantage of that because it expires in a couple of days, okay? And then the price goes back to close to $1,000. Let's see here. Diane asks, a range extension. What indications on the price movement would you make to extend from the price from the 100% range onto the 200% or more? I'm not really sure I understand that question, Diane. What indications on the price movement would make you extend from the 100% range onto the 200% range or more? I really don't understand the question. All I know is that just to go over the rules of range extension, remember, if we're looking at a buy setup, if we have a perfect scenario for a buy setup, the range is where the rally started, where the price started to head up, and where the top of that pivot was. That's your 100%. Now, coincidentally, that's right around where you enter too, because you always enter right around the pivot high. So all you do is double that, and you would exit at the 200%. All right. If you want to add that again, well, then you would add one more 100% range to that, and that would give you 300%, and that's where you would exit your entire position. Now, here's one thing I want to share with you that we teach in the course. This is a perfect example of why we don't trade systems, because we have a number of students who trade this entirely different each and every time using that same exit. We teach you as a beginner to exit everything at the 200% range extension, just so that you understand the process. But once you get a little experience under your belt, you can exit at the 300%. A lot of traders, what they like to do is, when price gets to 200%, they don't exit, they move their stop to unchanged. So now they're playing with the house money. They're not going to risk anything. When price gets up to 300, they exit everything, or else they move their stop up to the 200% level and they exit at 400. Other students will exit maybe half of their position at 200 and the remainder at 300 and or 400. So as you see, there's lots of ways to trade this. That's why we can't say it's a system. There's just 101 ways to trade it. And which market, which time frame? It's just too complicated. And you know that we're not a systematic company. We're giving you sound fundamental education and then designing it to meet your needs. Okay. Okay, let me see. Go to another question. I'm sorry, Diane, if I didn't answer your question correctly, but I really don't understand what exactly you were asking. But I hope that answered it. Frank is asking about the short-term pivot high. I don't want to backtrack on the slides again, Frank, but remember, if we're in an uptrend, a short-term pivot high is simply a short-term top. In other words, let's say we have a bar that makes a new high. The next bar makes an even higher high. And then the next bar makes an even higher high. But then the very next bar makes a lower high. Well, there you've just created a short-term top because you have this kind of arrowhead or upside down V. Okay? That's what we're looking for because that's just some type of top. That basically is where the sellers came in and now the tops are lower. Now conversely, a short-term bottom is just the same but the opposite. Let's say you have a bar that made a new low. Then the following bar makes a new low. Then the following bar makes a higher low. So you have low, lower low, higher low. You create this type of V formation. That just means that's where the buyers came in. That's a short-term low, a short-term bottom. So those are what we're looking for. You can either use them for entry points or for stop placement points. Okay? Let me scroll down here for some more questions. I want to thank you. These are very intelligent questions. I've got a very intelligent group here. Let's see. And once again, Becky has posted the link there on the chat box. You can just simply click that on and we'll take you directly to that $47 deal there, okay? Jim is asking, I am not sure about your exits. On the slide, the BBBY, near the 200% exit, the stock went below the lower Bollinger Band, but no exit. You kept in the trade and exited in 300%. When do you get if it goes wrong after some up movement? Okay, that's a good question. Remember, once we get into the trade, we are not concerned with price where it is in relation to the 50 period or the Bollinger Band anymore. Those are just for our entry setups. Those are just for our proper setups to get in. So right here you said, well, once you went into the stock in BBBY, later on it went below the Bollinger Band. That's okay. That's just for our entry. We're only concerned with the rules of that because it's telling us that a trend is in place. Now, there are a number of stop placements which we teach in the course and which we teach also in strategy number 1, which you can apply. You can also apply any type of, such as the gentleman offered earlier, the parabolic SAR. You can use that as well. You could trail it using a 20-period moving average. You can use the T-line, which Stephen Bigelow offers for you. There's lots of different ways. This is once again where we say we want you to become a part of the process. We have many students who just keep the stop placement at the initial stop and just say, listen, I'm either going to exit at the 300% range or I'm going to get stopped out with a loss. We have other students that use trailing techniques. But this is not a system. Remember, if it were a system, there would be only one way to place your stop, only one way to exit. We've shared with you how to get into this trade, a technique which is a great technique for exiting. But once you're in the trade, you don't have to worry about what the Bollinger Bands or the 50-period moving average is doing anymore. Okay? Once again, that only serves to overcomplicate things. We just need those to tell us where to get in. Once we're in, we can apply any tracking method we want, which we share with you in the courses, and any type of exit we want, which we also share as well. But I just gave you 2 very powerful stop placements as well as exit points. AK is asking, is it a one-time access only video or can we watch it as many times as we want? That's a great question. Probably what most people ask once they purchase the $37 deal. It's yours for life. This is nothing that's going to disintegrate or automatically you can't access this anymore. We provide you with the page, this online course, and you can see it whenever you'd like. You can watch it, while you're at work. You can watch it at home. You can use it as a refresher course whenever. It's yours to keep. Okay, so don't worry about it, dissolving or losing access to it. Pete asks, is strategy 1 hard to learn? No, all of our strategies are extremely simple. As I stated, when I was struggling tremendously on the floor as a specialist, my mentors said the reason why I was losing was because I was overcomplicating my trading method. I had maybe 20 indicators on my screen. I was waiting, on pins and needles for every news announcement. I was subscribing to every newsletter. So everything had to match up perfectly in order for me to enter a trade. It was just so complicated. and my mentors taught me something, and they said to me, I'll never forget it, they said, Steve, it is the easiest thing in the world to overcomplicate your trading. Anyone can do that. Anyone trading 5 minutes or 5 years can overcomplicate your trading. But it's the most difficult thing in the world to simplify your trading, because it takes a lot of courage to strip away the conventional wisdom, what we've been taught is supposed to work. But most of the time that stuff doesn't work. Conventional wisdom, if it works so well, if all the standard methods work, then why aren't 80% of all traders successful? It's exactly the opposite. 80% of all traders fail. So it took a lot of courage, but I stripped away all those things like trading tops and bottoms, different ways of trading that were supposed to work, and I started simplifying my trading, and that's when I started to become consistent, which has allowed me to be in the markets for 38 years now. So this is why all of our strategies are extremely simple. I wouldn't want to teach something that I don't use myself. So all of our methods have maybe 5 or 6 rules tops, maybe 1 or 2 indicators, and that's it. Nothing complicated, nothing at all. Most of them are based off maybe 1 or 2 indicator patterns or a specific pattern. We also have strategies that incorporate candlesticks as well. So just don't want you to know that we don't believe in candlesticks. We do. So we have those as well. Let's see, Lone Trader is asking, if trading off a daily chart, what option expiration strategy would you suggest? Well, first of all, we're not an option course per se, so we don't really teach option strategies. We have a great deal of members, though, that do trade options. And what they just basically do is they take our signals and they just transfer them over onto buying long calls or long puts. And that's it. It's up to you to decide, how far out you want to go, what strike price, because we really are not an options class. I traded options a long time ago in the 80s, and then I stopped trading them when they got too difficult. But I have nothing against options. I just don't trade them, so I wouldn't want to teach anything to anyone where I didn't have a strong hold on it. But having said that, as I stated, we have a good deal of traders who that's all they trade is options, and they apply our strategies to just using options. So that's the only thing I can really give you there, Lone Trader. Let's see, Achilles is asking, Boeing daily, 3rd week of January. Is this a good example of your Bollinger Band method? Well, I don't have access to real-time charts here with me, Achilles, so I'm sorry. I'll look that over. But remember, you have all the rules now. So you have all the information. This is what we want you to study and become a part of the process. Just imagine that you were learning a skill. Let's just say you wanted to learn how to golf, and I was your teacher or your coach. You wanted to brush up because you were going to be golfing in a tournament or, with your friends. I'm not going to be golfing for you in the tournament. I'm going to teach you and brush you up, but you're going to be doing it yourselves. Therefore, it's the same way with what our philosophy is of specialist trading. I'm not going to be trading for any of my students. I don't believe in that. What we do is we educate you and coach you, but then we want you to become a part of the process. So therefore, if you know the rules, if you know how to implement this, then do the research. Study on your own, because that's the way I was taught. My mentors didn't simply give everything to me on a silver platter. They made me explore and learn it, because that's what stuck. So this is what we expressed all of it. But we do give you all the information. It is like a mentorship once you become a member, but we want you to figure things out for yourself as well. Okay, time for a few more questions here. I don't believe we have that many more. Gary is saying, you can watch as many times as you want. It's worth it. Go for it. Thank you, Gary. Yes, I assume you probably had it. Armin is asking, Steve, how many strategies are there? Do you offer them all in one class? Good question, Armin. Well, we have different programs. Once again, when I first started specialist trading 7 years ago, we offered bulk courses. So in other words, I have courses in the Forex markets, I have courses in E-mini futures markets, and I have courses for stocks. Each one of these courses comes with upwards of 10 different strategies for all these markets, different time frames, different pullback strategies, continuation strategies, things of that nature. Okay, but these are expensive. These are anywhere from $2,500 up to $10,000, because there's tons of information. It's more like a personal mentorship that you get a lot of great information that's yours for life. Once I teamed up with Proprietary Strategies, we broke everything down, and so we offer individual strategies now through Proprietary Strategies. So we have a number of these strategies that you can purchase individually, starting as low as $500 or $600 all the way up. That's why this $37 deal is such a great deal, because you're getting one of those strategies as well as 3 hours of information for only $37. I really strongly suggest you take advantage of that because it's not going to last for more than a day or so. John says, would you use strategy 3A on your daily, or is it strategy for quicker trades? Well, it's up to you. Once again, it all depends on what type of trader you are. If you like to trade a lot intraday during the day, it's great for intraday trading. You just saw, some of the signals that were generated this past week. Okay. If you only want to trade, once or twice a week, well, use stocks then on daily bars. As I stated, every trader trades differently. We don't believe that two people should trade the same way. Some traders, some students we have only trade daily bars. Others only trade tick charts. Is one better than the other? No. The correct answer is the one that makes you feel the most comfortable, because that's where you're going to be consistent. A story I like to tell, when I first left the floor, I had a number of traders who wanted to learn my methods from me. So they came and sat with me at my trading desk, and I taught them all the rules to one of my main strategies. This is one of the strategies that we market on the website as well. They sat with me for a couple of weeks. They knew everything, and we traded alongside each other, and then they went on their own. I contacted them after the next week, because the next week was a great week. We all had winning trades, tons of winning trades, and contacted everyone, and everyone had different results, but most had very poor results. The reason was because they were trying to emulate my style, and they couldn't do it. Some thought, well, gosh, this is too risky for me. Others thought, well, it's too slow. Others thought, well, it's too fast. There's too many trades here. So that's when I came to the realization that you should never try to emulate how someone else trades. You should, sure, use the basic format, but then mix and match to meet your needs, because some traders trade aggressively. Others trade conservatively. Once I really understood that concept, that's what I have as the format for specialist trading. We provide you with sound fundamental education, but then we mold it to meet your individual needs. Okay. Just a few more questions here. Do you use any other indicator other than above below the 50 moving average to indicate trend? Good question. No, that's basically, we have another very, very popular indicator. It's a tool, it's a totally different tool. It's called the PET-D. It's a short-term trend identifier. It's a color bar algorithm. This was also introduced to me on the floor of the exchange. But that's something entirely different, and that's a great trend identifier for the short term. Okay, you can ask the people at Proprietary Strategies about that as well. They may have a discount for that as well. Pat asks, will this strategy work on commodities, as meats, grain? Sure, it works on anything where there's a trend in place. But remember, if the requirements are met, if you have 5 consecutive closes above or below the Bollinger Bands, and if your entry is above or below the 50-period moving average, this technique is not asking, well, is this a stock or is this a currency pair, because I won't work on the hogs, or I won't work on livestock. The technique doesn't care. It's just monitoring price. That's all it's doing. So there's, as long as the trend is being established, that's all it's looking for. Remember, we're not concerned with any other outside sources other than the chart we're looking for. That's the only thing we want. Okay. Gary says, I asked this question about scans and he never answered it. Oh, I'm sorry, Gary. I must have bypassed you. Were you wondering whether there's a scan for this? No, but it should be very simple. We don't have a scan for this ourselves, but this is just, remember, once again, this is something that we're an educational company. We want you to be able to spot this on your own. I trade this technique without a scan. I just go through and have been trading it for so long, I can see right off site whether a setup is taking place or not. So I don't really think that a scan is something that you really need necessarily. It's that simple to spot. After a few weeks of practicing this paper trading, you'll be able to spot this just like the back of your hand. It'll be simple. Okay. Once again, William, he asks, is the strategy back tested? In order to back test something, it has to be a system. This is a strategy. We don't trade systems. We only trade strategies. Everyone trades it differently. I just spent a good time talking about how no two traders should trade alike, but systems require that you trade the same way. Okay. How many strategies on the online video, Kenny? There's just one, just strategy number 1, but we also give you different techniques and different things that you can apply to different strategies. We give you great exit techniques. We give you great trending techniques. The number 1 chart pattern, which is that we feel be incorporated in many of your strategies. All of these are different edges that we feel you should incorporate in your current strategy or build a strategy based off of these current edges, along with all the complete rules to strategy number 1. Okay? Phil asked, please show how to set up the Bollinger Bands in Thinkorswim. Phil, that's something you have to ask Thinkorswim, okay? We don't have access to Thinkorswim right now. This is just a static PowerPoint presentation. So call them up and talk to their tech support. They're the ones who you should be contacting, okay? The range extensions, just very quickly, the range extensions are just someone who's asking for a quick recap of the range extension. Remember, wherever the rally started and wherever the top of that first pivot point was, that's your 100% range, okay? So let's say that's 10 points, okay? If you want to have the first exit, you simply add that 10 points to the top of the range, and that will give you your exit, okay? It's in the video. We have this. This is being recorded. You can request a recording of this, and I go over it in detail. Zuzu asked, do you use trailing stops? Yes, we do, but I just gave you the standard format. You can apply any trailing stop you'd like. We go over the different trailing stops in the courses, okay? I'm just going to take one more question. Remember, this video is an online course. It's not a DVD or something you have to wait for. It's something that you have to basically just click on the link and you're there. Oh, great. Someone is clarifying what Diane was saying. What indicators or what other things would you suggest to you that is advisable to go for 200% as opposed to exiting as 100%? Okay. I think, let me explain it even better than that was. In other words, what they're asking is there a different exit strategy? That's all you're saying without me. See, this is what we talked about overcomplicating. Is there a different exit strategy other than the range extension? Yes, there are. In fact, you can apply the strategy in strategy number 1. Okay? We have an entirely different strategy you can apply for that, and that's in the $37 deal. Okay? We just can't go over all the things right now. CB just bought the $37 offer, and it says for today only. So my mistake. I'm sorry. So there is it's something you should take advantage of because it is going for today only. It was my mistake. I know that Proprietary Strategies is in charge of all of our promotions. So yes, if that is something that you want, I mean, $37, you can't even go out to dinner for for less than $37. So it's a very inexpensive price for tons of information. So if you're really thinking about taking your trading to the next level, I strongly suggest you take advantage of that $37 deal. Okay. I just want to thank you all. I think our time is about up. I want to thank you so much for attending today. I want to thank Stephen Bigelow. I want to thank all the people at Candlestick Trading Forum, Becky, as well as Jim Cooper for putting together all the technical aspects of this. And thank you for giving me the opportunity to speak again. I've spoken before to these groups, and I really appreciate it. I always have a great, intelligent audience here. And remember, our site is there for one purpose, to educate you, because we feel that education is what's going to take your trading to the next level. It's not going to be some fly-by-night system or somebody who has the best calls for the last 2 years. It's going to be you who make the trading decisions. We want to empower you with this information so that you can ultimately take back your trading decisions and leave the ranks of that 80 percentile group that ultimately fail. We want you to be trading 10, 20, 30 years down the road, and the only way you can do this is through consistency. So this is why we're offering you this in good faith at such an inexpensive price. Hopefully you will be able to take advantage of that. You will be able to get onto that road to consistency. Okay? We want to thank you so much again for attending. Thank you to everyone here for taking time out of your Thursday night. And in closing, I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much, and we shall see you next time. Bye-bye.